Hi, everyone, and welcome back to Wall Street Silver. Our guest today is the one and only commodities investing legend and the founder of Rule Investment Media, our good friend, Rick Rule. Rick, it's great to see you again.
Pleasure to be with you, albeit in uncertain times.
So Russia has invaded Ukraine. Commodities are going crazy, Rick, and is now the time to panic.
Never the time to panic. Imagine that you're a Ukrainian soldier and the Russians are coming across the border. You want to do anything but panic. Investors in a circumstance like this, confronted with volatility, confronted with 60 or 70% share price declines in certain circumstances, or 30% share price escalations, cannot afford to panic. Anything but panic.
Well, Rick, Russia dominates a lot of commodities, and they're being kicked out of the SWIFT system right now. One of the key things that we all need to keep in mind, I think, is just how dominant of a player Russia is in some of these commodities. This is a chart I found that shows the percent of Russia's exports as a share of the total world. And this is just not something that can be ignored so casually, is it? This is not replaceable, like, oh, I'll just go somewhere else, right?
Remember that markets work. So is it replaceable? If the price of natural gas stays as high as it is now, people will find substitutes. So over time, the answer is yes. Remember that markets, while messy, do in fact work. And if the world were denied access to Russian oil and gas, over 3 or 4 tumultuous years, a solution would be found. Other places would produce more and consumers would consume less. But it would be unpleasant. If you look at the chart, what's inexplicably missing is Russia's share of the palladium market, which is 42%. If you want to find a market that would really be disrupted, look at platinum group metals, look at catalytic converters for cars.
Yeah, that's the main use for palladium, is in the car industry, or
yeah,
or it's in the chip industry too, right?
Computer platinum and palladium's principal use is in catalysis, either for individual transportation or things like chemical manufacturing, petroleum refining, air pollution control, that type of thing. They have other uses as well, but in terms of tonnage, it's auto catalysts.
Are you anticipating any sort of food impact from this? Because we're coming up on spring, and I was just thinking the other day, that's spring planting time. This is corn production and export share. Look at Ukraine here. That's a huge piece of the corn puzzle each year. And the same chart's available in barley. Well, I guess beer is going to be an issue this year. I mean, Ukraine's a major producer of that. And also wheat. If you look at the wheat market, Russia, this is their export tonnage. I don't know if that's being blocked also as part of sanctions, but Ukraine, 18. I don't know if spring planting is going to happen on schedule this year in Ukraine.
It would take, given the current circumstance, special courage to plant in Ukraine this spring, among other things, notwithstanding the war, simply because of the lack of inputs. So I don't think that's going to happen. And obviously planting will be disrupted as long as war goes on in Russia. And the mechanism to pay for Russian exports, with Russia being kicked out of the SWIFT system, is going to change. I'm not sure that very many people would, I'm not sure that Russia would ship wheat if they couldn't get paid for it. Mm-hmm. And I'm not sure that other people will ship other things to Russia if they can't get paid for it. I mean, make no mistake, a lot of things are going to be disrupted. Certainly the world has survived many worse crises. You'll remember World War II. But this is going to cause disruption. This is, and I'm not merely talking about the people on the ground in Ukraine being murdered. This is going to cause a disruption for everybody. So far, a lot of, predictably, the impact has been political. You'll notice that in these hard-hitting, sweeping sanctions applied against Russia, Italian lobbyists managed to carve out the sales of luxury goods to Russia. So I guess somehow Gucci's are so important that they couldn't be allowed to interfere with the War Act. And most of the world, despite the fact that they've taken the extraordinary step of curtailing the export of Russian vodka have decided that oil and gas are less critical to the Russian economy than vodka, I suppose. So I think that there's room probably for the situation to get more serious, given the fact that outside of Russia and Ukraine, the principal response has been political.
Oil and natural gas have not been, they've been left out of the sanctions because Europe needs them so much. One of the key things that we've noticed this week is that even though it's not sanctioned, traders are avoiding it. It's impossible to get a tanker to go there because a lot of the shipping companies are avoiding Russia right now. Insurance companies won't insure shipments.
Correct.
Banks won't provide lines of credit, even though they're not, it's just not worth the trouble. So even though they're not sanctioned, they're indirectly being sanctioned now by the market, correct?
And for 40% of Russia's gas exports, the VTOL pipeline goes through the Ukraine. The Ukrainians might be expected to object to that somehow. So I think you're right. I think there are serious logistical objections. There are serious logistical problems in investing in Russia, which I have done with the interruption of the SWIFT banking system. One of the lovely things about Russian stocks was they paid lovely dividends. The Russians, even assuming that they had the will to pay me my dividends, don't have the means at present because they can't get dollars to pay me. I understand that my problems pale with the problems experienced by Ukrainians and Russians, but I just wanted to point out personally that this sort of disruption impacts everybody, even an old, fat, bald speculator from the United States.
But are you familiar with, China does have a replacement for the SWIFT system, they call it SIPS. And it's my understanding that's operational now in China, Russia, and even some European banks. Is that, China's the manufacturing hub of the world. Do you think that's the way Russia just sort of ignores all this and gets around it?
I don't think that they're able to ignore it and just get around it. I don't think that SIPS is a robust enough system. And I don't think that the renminbi and the ruble are liquid enough currencies that this is a long-term solution. Many, many years ago, Jim, I had occasion to talk to the manager of a Asian sovereign wealth fund about their reliance on US dollars and US securities. And I made the remark that arithmetically the dollar felt like a lie. And I remember him saying to me, yes, a lie to be sure, a deep and liquid lie, unlike all of the other lies that we're being told. And I then pressed him a little bit. I said, do you trust us? And he said, oh no, but we trust you much more than we trust each other. And I think the problem that will occur as a consequence of this for the Russians, for the Chinese, for the Indians, for the people who rightly from their own point of view would like to circumvent the extraterritorial application of US policy through SWIFT will be the lack of fungibility on a global basis of their currencies and their profound distrust for each other.
So, silver and gold have had huge runs on all of this uncertainty. We've had a huge run up in gold with everything going on in the world. And what's your take on this? Is this a short-term invasion-related run-up, or is this part of the longer-term continuation of the bull market?
It may be a trigger. In my experience in the gold market, which goes back to 1971, runs in precious metals that are due to geopolitical fears are usually very short-lived. Runs in precious metals that are due to investors and consumers' fears of the efficacy of their purchasing power in fiat-denominated instruments are permanent. People often use current events to allow themselves psychologically to do something that they were otherwise going to do. And I suspect that some part of the hyperbolic move that you see in that chart is the fact that people have wanted to participate in the gold market. They looked at the wedge that you can see so obviously there, but they were concerned about the timing and that the Russian invasion gave them the psychological stimulus, the psychological permission to do something that they had already wanted to do. But in my experience, relying on geopolitical tension as a catalyst for higher precious metals markets hasn't worked.
So Rick, your other favorite topic after silver, we know silver is your top favorite topic, but after silver, you're well known for your knowledge and expertise on uranium. Russia's a huge player in the uranium market. Why is uranium now rising, and what should we be aware of?
I'd say there's three factors. One is the primary factor. Russia's a fairly good-sized uranium producer. Obviously, it's going to be difficult for them to ship fuel, and even more difficult for them to get paid for the fuel they ship. But more importantly, Russia is responsible for more than 40% of the enrichment capacity worldwide. The ability to turn spent fuel rods into fresh fuel rods is a Russian business, and that capacity, if you will, has gone to capacity heaven. Shipping spent fuel into Russia, receiving recycled rods from Russia, paying the Russians for the work obviously has been interrupted. This is massively disruptive. But the most massive disruption, I think, goes to energy security. The world relies on Russian uranium. Yes, the world relies on Russian coal. The world relies on Russian oil and gas, particularly the Europeans. And the increase in prices that we're seeing for oil and gas, and the realization that stable sources of energy are required, means that many of the places in the world that thought that they could afford to turn off nuclear power are rethinking that. Even Germany, which is the most prominent of the nuclear refusers post-Fukushima, said yesterday that current circumstances mean that they need to rethink their policy of shutting down the rest of their nuclear fleet. The most important outcome for the uranium business, however, is that this will add an extra incentive to the Japanese to increase the pace of Japanese restarts. You'll recall that the Japanese nuclear industry shut down post-Fukushima. They have now restarted something like 10 or 12 nuclear reactors, but 18 are in for permitting. Japanese public began to find favor in uranium 2 years ago as a consequence of Japan's Kyoto Protocol promises, and the fact that they could never meet their Kyoto Protocol guidance or clean up their own air, generating power by burning oil and by burning coal. But the whole specter of energy security is what drove the Japanese to the nuclear business in the beginning, in the early part of the 1970s, during the oil embargo. The fact is that in Japan, the energy shortfall has been made up by liquefied natural gas. And the price of seaborne liquefied natural gas in the last 6 weeks is up by 300%, reinforcing to Japan, an energy poor country, that the only viable option they have for energy security is nuclear.
The enrichment thing really sort of strikes home. I know Kazakhstan, one of Russia's neighbors, is a huge mining producer of uranium. I assume most of that then gets shipped to Russia for processing and turned into uranium fuel for nuclear power plants?
The Kazakhs have done a pretty good job of diversifying their supply chain, which is to say they ship a lot of yellowcake, including a lot of yellowcake right south of the border into China. But once these rods, these fuel rods, have been fabricated, and they're custom, reactor by reactor by reactor, when you have drawn the energy discharge capability of the rod down below critical levels, those rods are often gathered and shipped to a reprocessing facility where they're re-energized. And over 40% of the world's capacity for that is in Russia. The Kazakhs have not built up any substantial enrichment capacity in Kazakhstan. Their own uranium mining industry has consumed so much capital relative to the company's ability to provide that capital, that they've left that part of the supply chain to the Russians. And that is obviously very, very interrupted now.
Yeah. Well, thank you very much for joining us on short notice. Just so the audience knows, we, just sent you an email and you jumped right on because of what's going on in the world. We really appreciate your time, Rick. And we'll talk to you again. Our audience loves to hear from you.
It's always a pleasure. I'll remind that part of your audience that hasn't heard this offer. If any of you care what I think about your natural resource investments rather than natural resource investments in general, including your Russian stocks, go to ruleinvestmentmedia.com. I'll rank your natural resource stocks on no obligation basis and send them back to you.
Yep, I'll leave the link to that in the description. Thank you very much, Rick. Appreciate
Thanks,
it.
Rick.